Welcome back to our video series on binary options. In this video, we'll talk about charting and how to use some basic technical analysis in our binary options trading strategy. The premise of technical analysis is that price and volume are the only pieces of information necessary to analyze trading. All of the other information is processed by the market, and the price and volume represent the output of that processing. Technical analysis is the study of price and volume and how they evolve over time in order to predict future price movements. For binary options trading, it's very important that we learn to predict future price movements. In particular, we can simplify the analysis because we only need to predict the direction. Where is the asset going? We don't need to be concerned with how much it will move in that direction. With traditional options trading, we have to set target levels and stop losses. With binary options, it's very simple. We pick a direction and a dollar amount. So how do we figure out which direction our asset is moving? Well, at the core of technical analysis is typically a candlestick chart. And a candlestick chart looks like this. Each bar, red or green, represents one period in the price history of the asset. In this case, we're looking at 5-minute periods for today. So let's talk about what the candles mean. Here's an illustration of some candles. A candle is a neat way to show the open, close, high, and low of the asset during that period. The body, or wide part of the candle, represents the open and close. And there are typically two colors of candles in a chart. They'll either be red or green, white or black. In each case, the color indicates whether the close is higher or lower than the open. The lines above and below the body are typically called the shadow or the wicks, and these represent the high and the low. So as you can see, there's a lot of information wrapped up in each little candle. You can see more than just the closing price during the period, as you would with a line chart. You can begin to get a sense of the momentum behind the asset and whether the buyers or sellers were driving the price action during that period. We're always looking to figure out whether buyers or sellers will be dominating because that's going to drive the momentum and therefore the direction of our asset within the next few periods. Single candles by themselves are useful, but the real use with candlestick charts comes in when we're looking at multiple candles. So let's go back to our example. This is actually the currency pair euro versus US dollar. I want to draw your attention to a few candles that I think are really important here on this chart. The first one occurred early on in this chart, and it's this long red candle. So red means that the close was lower than the open, and the size means that the asset went down significantly during the period. The wick or the shadow is very small, meaning the close was near the low for the session. In this candle, sellers dominated the price action. The bulls were nowhere to be found. This to me is a very bearish indicator that the asset will continue to decline. For a binary options trade, I would bet on this asset going lower, so I would buy puts on a very short-term basis. And sure enough, in the next couple of candles, you can see that the price continued to go lower. After that, the buyers came in and staged a bit of a rally, but it failed to go beyond the top of that first long red candle. Again, that's another bearish signal when it failed there at the top of that long red candle, and the bears came back. So again, that would be another opportunity to buy puts. And you can see that I would have been right and made money as the asset continued further down. So the next area that I want to draw your attention to is this pair of candles. The first is a red candle with a relatively long wick below a relatively short body. This to me means that the sellers dominated the first part of the session, but after it hit the lows, the buyers came back in and brought it back up to close significantly off the lows of the period. I've also drawn in this horizontal line to indicate where support should be. And I'm basing this on these regions where the asset up here kind of failed here to break above, and here it failed to break above. So you can see that that area is a significant area then of support where the buyers all of a sudden came back in. The next candle is equally as important because it's green. So that indicates that the buyers were actually able to win that battle during that period. Sellers initially pushed it a little bit lower, but the buyers came back in and actually pushed the asset to close above the open for that period. At that point, I would be looking to buy binary call options, betting that this asset is going higher. And sure enough, I would have been right for just about any expiration for the rest of that day. So those are just two of the candles that are important to me on this chart. Let's take a look at another example. So this is another currency pair. This is US dollar versus Japanese yen. And again, it's 5-minute candles over a 1-day period. In this chart, the first candle that I want to point out is this one that I've highlighted. This candle has a very small green body with a very long wick below and a shorter wick above. In this situation, the bears have dominated the last few sessions, pushing it lower and lower and lower. The question in my mind is, when is this downward trend going to end, or is it going to continue? So when I see this green candle, and by the way, this type of candle is called a hammer. It kind of looks like a hammer with a small body. This green hammer shows that while the bears may have dominated this period initially, pushing the stock down to the lows of the period, at some point the bulls, the buyers, took over and pushed the pair back up above the opening level. So this to me looks like buyers are back at the table, and at that point I would use that as a trigger to buy a binary call option after seeing that candle. And again, you can see that the pair traded higher for the next couple of hours. So on this chart, another candle that I want to look at is this one here. And this is kind of the reverse of the one we just looked at. So here we had 2 sessions where buyers were really dominating the price action. And it looks like here the buyers dominated initially, pushing the asset up to this high level. And this level looks technically important here. That's why I've drawn this line in. This level proved to be an area of resistance here and here and here. At this point, when it reached this level, the sellers came back in and brought the pair back down to close below the open. So this is a bearish sign, and that would have been to me a trigger to buy binary put options, betting that the asset's going to go lower. And as you can see, the price action continued lower, and I would have made money on that trade. So these are just some basic charting strategies that you can use. Again, the idea is to get a sense of whether the buyers or the sellers are dominating the price action. Once you know who's in control, that'll make it easy for you to make a profitable bet on the direction of the price movement. The great thing about binary options is that you don't have to worry about the magnitude of the move. You just need to get the direction right. Charting and technical analysis is a key tool for your tool belt to help you figure out which direction your assets are moving and therefore help you trade more profitably.